SA is optimistic it can resolve an impasse in Zimbabwe. That country's Environment Ministry plans to attach SAA's assets for allegedly owing $2.4 million in unpaid fees. SAA, meanwhile, is fighting the claim and has told Zimbabwe's Finance Department that this is seen as unnecessary and unnecessarily disruptive action, as the government of Zimbabwe owes SAA a much larger amount. The state owes the carrier $59 million in non-interest-bearing blocked funds. SAA has proposed that the debt be offset against the blocked funds, though the ministry appears to have declined this approach. Sasfin's plunged into the red. The financial services group has reported an annual headline loss of just over 58 million rand. That's from a profit of 112 million rand previously. The firm says the slide is due to an increase in credit losses and negative fair value adjustments. That's as a result of the challenging economic environment. High once-off costs also weighed. A strong rand and oil price volatility have weighed on Sasol. The energy groups released a first quarter update saying global chemicals markets remain oversupplied and that high input costs along with weak chemical prices and demand have affected its margins. Sasol's maintained its 2025 market guidance across its business segment, except for Natref, which has been revised downwards. Adcorp's flagged lower half-year profit. The human resources specialist says it experienced challenging market conditions in South Africa and Australia, and in a bid to cut costs and enhance efficiency, it launched a restructuring initiatives. That move has weighed on its bottom line. Adcorp says its interim headline earnings could decline by up to 19%. The firm is set to open its books at the end of this month. WeBuyCars is also expecting a drop in profit. The firm says its annual headline earnings could decline by at least 55%. It's blamed non-core one-off transaction costs. That includes professional, legal and JSE listing fees of 45 million rand incurred before it went public in April. WeBuyCars says a call option derivative accounting adjustment also weighed, and if the impact of those are stripped out, core headline earnings could be up by about 20%. Further afield, the shares of Hyundai Motor India took a knock in their market debut today in a tepid start to trading for what was the country's largest initial public offering. Let's take a look at this report for more.
Hyundai Motor India's shares fell over 7% in their market debut on Tuesday. A tepid start to trading after raising $3.3 billion in the country's biggest ever initial public offering. Shares traded as low as $21.67 after they were priced at $23.31, giving the company a valuation of $17.6 billion. Hyundai, India's second biggest car maker, was targeting a valuation of $19 billion. Its record IPO was oversubscribed more than twofold last week. But pricing concerns deterred retail investors who worried they would not be able to make gains on the listing. Shares of Indian rivals have also slipped in recent weeks. Car sales have slowed after 2 years of record highs, with customers delaying purchases on worries about stubborn inflation. Tuesday's listing in Mumbai is Hyundai's first debut outside its home market of South Korea. It comes at a time when India's equity markets have risen sharply. Hyundai faces competition from domestic rivals Tata Motors and Mahindra & Mahindra. It plans to use proceeds from its sale of a 17.5% stake in the Indian unit to invest in research and launch new products.
And Microsoft will allow its customers to build autonomous AI agents from next month in its latest push to tap the booming technology amid a growing investor scrutiny of its hefty investments in that space. Here's more on this in this package report.
Microsoft will allow its customers to build autonomous artificial intelligence agents from next month. It's part of the company's latest push to tap the booming technology amid increasing investor scrutiny of its hefty investments in AI. These so-called autonomous agents are programs that need little human intervention, unlike chatbots. And the company is branding them as apps for an AI-driven world that can handle client queries, identify sales leads, and manage inventory. Microsoft said its customers can use program Copilot Studio to create such agents in public preview from November. It's using several AI models developed both in-house and by OpenAI for these agents. Rivals like Salesforce have also touted the potential of such tools, which some analysts say could provide tech giants with an easier path to monetizing the billions of dollars they're pouring into AI. That's as many of them face pressure to show returns on these investments. Some concerns have risen in recent months about the pace of Microsoft's Copilot adoption. Microsoft shares fell 2.8% in the September quarter, but remain more than 10% higher for the year.